Hello, everyone, and welcome back to my weekend market analysis series. Trust you had a great weekend. So, last week, the price of gold hit a new record high on Wednesday around the 3,167.50 level, just right here after Trump's reciprocal tariff announcement. But then things took a turn. The price of gold retraced, maybe as a result of profit taking activities after price tested that all time record, falling back to a 7 day low around the $3,015 area on Friday, just right here. A move that was influenced by strong NFP figures with 228,000 new jobs added in March, well above February's 151,000. Then, during the final trading hours on Friday, we saw signs of recovery after the Fed Chair warned that tariffs could lead to a resurgence in inflation. Now, we are at a real crossroad as price is back within a significant structure around the $3,015 area, a zone where the previous week actually started. So, what's the market really thinking about all of this information? And what does this mean for the price of gold going forward? In this video, I'm going to be breaking down what I am seeing on the chart. We will look at the key price level for the coming week, figure out the overall trend, and see if we can spot any potential trading opportunities based on how the market is behaving right now. Looking ahead, next week is set to be a busy one. We've got a bunch of speeches from Fed officials, the release of the latest FOMC minutes, that's on Wednesday. We are getting new inflation numbers on both the consumer and producer sides, that's on Thursday and Friday respectively. And finally, we are going to be witnessing the University of Michigan's publication on Consumer Sentiment Index. Now, the anticipation of all of these factors have likely influenced how the market closed on Friday, and we will be deciphering what that means on the chart. Just a quick note before we get started. What I share here is my personal view of the market. It's not financial advice. Always do your own research and consult with a professional financial advisor before making any investment decisions. So, with that said, let's jump in and see what the gold market have in store for us this week. So, trying to interpret the current market structure based on the information we have gathered earlier, what I did here was to take into account the character of price action in the last 4 to 5 weeks. And from the look of things, it is quite clear that the market is strongly bullish. If you look at the structure closely, you can see price had consistently and uniformly found higher highs and higher lows, giving us this beautiful ascending trend line to work with. And you know how we use our ascending trend line. As long as price remains above the ascending trend line, we want to be looking out for buying ideas. Now, the only condition that will make us consider selling is if this ascending trend line is breached and broken to the downside. Now, since the beginning of the month of March, you can see the trend line had consistently been respected, as you can see here. And last week, we saw how price closed exactly around that trend line. And immediately price got into the trend line. What did we see? We saw some buy pressure resume from that area, though this comes in at the same time the Fed chairman emphasized that the recent tariff situation could reignite inflation in the United States. So the fact that price remains above that trend line for me makes me lean towards an uptrend continuation. Now, how do we navigate buying above this trend line? Now, that brings me to where my key level is going to be. Now, if you zoom into the current structure, that is the last 1 week, you will see how that area around the $3,015 area had become a robust demand zone. So you will see that ever since in the last 1 week, we saw how sellers found it difficult to break through. So I have my demand zone between the $2,998 and the $3,015 level. Now, my key level for next week is going to be sitting at the $3,015 area. Now, the fact that price is sitting above both our key level and the demand zone, I'm willing to continue the uptrend scenario. So, as at the beginning of next week, I will be placing my buy position above the structure and hoping that price will move as far as getting back into the previous high, which dovetails to a minimum of 1,300 pips. So that is what I'm looking at to buy the XAUUSD, depending on how the market sentiment plays out next week. However, if price breaks down both the key level, the ascending trend line, and that demand zone, this could trigger a bearish signal. Now, before I can jump into a sell, I would love to see price give me confirmation. And of course, this will come in the form of price coming back, retesting the structure where the inability of buyers to rise above the ascending trend line will be a beautiful confirmation to join the decline. So that is how I will be trading the gold commodity next week, where the crucial juncture in this market remains around both the ascending trend line and the $3,015 area. Trust me, I will be with you in the comment section on Monday morning after monitoring the character of price action around this area during the early hours of the week to give you an update on what I am doing in this market. So, there you have it, my in depth look at the XAUUSD for the week ahead. If this video helped with your independent trading decisions, a thumbs up will be greatly appreciated. And if you haven't yet, consider subscribing for more insights, weekend market prep, and updates. Thanks for watching. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye bye.